Good morning, traders. About 20 after 9. And today is the 13th of August, 2019. Reminding traders to use risk capital you can afford to lose. E from marketwizards.com and eminywizard.com. All right, let's take a quick look. We had suggested in pre-market to give news a little time to play out. I'm going to bring up this chart, which is the one that I was relying on. I had suggested that 68 is a squeeze pivot. And on this chart, you can really see it. It stands out. Now, it doesn't mean it has to work, but it sure tells you something when we get that kind of a tail. So relying on that one particular bar was the reason that I suggested 68 squeeze pivot. Make sure you are paid by 69 and a half. Below that, trail only. Part of it was timing, part of it was the price location, part of it was the idea, can we hold the 72s? So on the first bounce back, you get a retracement of the swing, and I posted that 72 and a quarter was the middle of that swing. But when we get that kind of retracement, you want to pay attention to that level because that is yesterday's low. And then theoretically, traders that have had a nice overnight are going to want to get paid coming into the open. And so the timing really became much better, I thought, for the buy side to come back towards the middle. And if you played that way, you should be paid by this 78 and a quarter, 77 to 78 and a quarter. So that one trade alone that we talked about pre-market should set you up nicely for the day if you played either both ways or took one side of it or the other. And this, of course, is the bounce trade is really a half gap type trade right now. Playing to come back in towards the overnight close. It's a nice trade if you took part of that, and if not, no worries. There's always another bus coming. I've got for the gap we're using at 80, and the last late close was 82 and a quarter. So originally this morning when I posted, make sure you are paid. If you are long side, make sure you are paid in this 78 to 82 range, relying on the 60 back, top of the pipe. And then a retest to the bottom and a bounce back in towards the middle. And we have taken out the news open. So that's thank you, Zeke. 2 to 10 treasury spread nearing zero. Yes, thank you. One of the best guys around I know is Zeke to help us interpret that type of information. So coming into 78, just like before, to 82, make sure you are paid. And I posted in the room also that I thought today we need to be very careful overthinking the short side. And I'd suggested that we've had several days of a sell, and today could be a Taylor day 3 buy. Overnight, the chart that I had posted here, we had several instances of this blue line working. This is the 15. 1, 2, 3, 4, 5. This is the 6th attempt, and this starts to get lower and gets easier to step over. So be aware of that. This has worked beautifully the last day and a half here. But I think we need to be a little bit more careful today about just relying on 15-minute slope line. There was one of the charts that I had posted earlier. And I had said that this is the monthly chart, and note that we are in this box right here with a 65 and a quarter support and the 95 resistance based on this one chart alone. So basis this as our reference. 95 still a resistance zone, 65 and a quarter, trying to hold, and this is the bottom of the pipe. Basis the monthly. So that's why I said let's be a little bit careful about overthinking that we're just going to plunge. Cannot just be a one-way trader in this business. Thank you, Zeke. Another chart posted in the room earlier showing that relationship right here. And I'd suggested at the time before news, make sure you are paid by yesterday's low, 72 and a half. And at the time, I'd call this 82 to 78 resistance zone, and I said this, make sure that you get something out of this if you're long. Then we got that retracement move and then the bounce back. So you just try to read the rhythm, and these are still successive lower highs, lower lows, so we need to be aware of that as well till that pattern changes. And these are all of the points that I had illustrated how this had been working. It hits the slope line and we come down, take out the low. It's the slope line, takes the low. We did not this last trip take out the low. So for now, I'm going to think range type trading. Probably can hit a bounce today, but I'm still thinking that they're going to try to get back in the shorts pocket before we're done. So any new shorts now coming in, don't forget we've got a gap type trade. If you are long side, should definitely be paid coming into this 78 and a quarter, my feeling. And you don't have to be in the market all the time. One of the biggest misnomers out there, people thinking they always have to be in the market. You don't. We're looking to catch pieces of these swings. All right, basis this chart, the market has to get above 82.75, and then that opens the door to get up into the higher 80s, including this 91, which will be a very important area going forward. And that's a 40 back currently on a 2-day swing. This is today's predictive chart. We're off the chart, which means that we have to readjust our dynamic pivots if we come back and take out this low again. So that was one of my concerns about this 71 area. And if you're looking at this dynamic, it certainly tells us that a trading range we need to be aware of is this 91, 92 area resistance. And the middle is going to be obviously this gap area from yesterday. And then can the market get under 71 and stay there or not? 72 and a half, yesterday's low. So currently we're in an extreme zone based on a 2-day range and based on today's prediction. If we're looking at the OTF, which is the weekly, then we can see that we're at the bottom of the pipe. And if we break, we can rely on this chart to tell us the next zone. So we're going to use this as a backup if we get lower. And for now, just figure that we are inside this box right there. Going to be opening up shortly. Angels and Demons. I posted that 70 and a half was the angel, and the demon overnight is 86 and a half. So we can see a lot of time spent down here under this 80, but have not been able to make any new lows since overnight, early morning hours. And right now, this is an important idea. Now, I went back and I look, whenever I see a line, I went back and I looked and said, what's that all about? So what I try to do is leave some of these lines on to give me a clue as to what's going on. And you could see this line right here. This is a third time through trade that I posted in a room. I said, okay, the overnight low, why is that line there? So I go back and I find this on the 7th of August, right? Down, up, down, cannot take out the low. And then we take the third time through trade. So this is really what we're testing currently, are these lows back here on the 7th. So that's one way to keep a couple lines on your chart. And then when they show up, you can go back and say, what was I thinking? So that's what I was thinking, that, okay, so that's a retest for now. And everybody's calling for the 25 and 30 lows and whatever. You got to resolve the current range first. And that means that the overnight low is support until broken. So today we're using 62 to 65 as our immediate support, and thinking we may get a bounce. Now, if we take out the low, then anything goes. But for now, I'm thinking that we need to resolve the overnight range first. Gap traders, 80 is the gap. Tighten up as we move towards it. Nice trade if you took this bounce. Great chart here, the monthly chart. Fantastic help overnight. Yearly chart. This is the range that we are in. This 53 is going forwards as a big idea, bottom of this level. So this is the range that we're negotiating right now on a yearly level. All right, play well. We'll talk about a couple other things. I'll go over to our projection charts, and I'll go over this in another video.